watching from? What's up, everybody? Welcome to the live stream. And I'm stock market coach and option trader Jason Brown. If you are new around here, welcome to the party. Let me know where you're watching from in the world of YouTube, what state you're tuning in from. It's been a minute since we've been live, and I wanted to jump on here and just do a week in update and talk about all the headlines, some of the things that's been going on in the stock market. My good man Michael Anthony is joining us here. So Michael Anthony, welcome to the party. So I wanted to talk about some of the top headlines that's been going on in the stock market this week. And before we do that, let's first take a look at the charts. Let's take a look at the charts, and then let's talk about how the news has impacted what we're seeing in the overall markets, what we're seeing in the S&P. Oh, my volume. Hold on one second. One second. One moment here. I think he said my volume's low. There we go. My volume should be normal now. Is it normal now? Give me a thumbs up if my volume is back to normal. Let me see. Michael Anthony, thank you for telling me that my volume was a little light. It should be back to normal now. I was using the wrong mic. And so, yeah, we got two different microphones in here. So hopefully you guys can hear me okay now. Give me a thumbs up. Give me a comment in there if everything is coming through normal. Yes. Okay. I see the thumbs up. All good for now. Perfect. Man, I appreciate you, brother. Thanks for letting me know. All right. So what I was basically saying is welcome to the live stream. If you've been here for 2 minutes and couldn't hear me, my apologies. We fixed the mic. We fixed the issues. I'm excited to go live and just talk about some of the top topics that was happening in the stock market this week. And then also looking at the charts of the S&P 500 and just talking about where we're at this moment in time with the stock market. So let's start with the first story of the evening. And I'm just going to draw this story out. The first story that has just been plaguing us is tariffs, right? I mean, the tariffs have just been taken over the news. First issue with the tariffs is what? The fact that we're even putting them on our partners, Canada, Mexico, and then obviously China. And so what initially happened when the tariffs was announced, Donald Trump backed them down and said, okay, we're not going to do tariffs right now. We actually gave him about 30 days or something like that. And everybody kind of breathed a sigh of relief. Then he came back and was like, tariffs go into effect at midnight Tuesday, right? And so the tariffs, quote unquote, went into effect on Canada, Mexico, midnight Tuesday. And the problem with that is when you think about Canada and Mexico, I'm going to just go Canada and Mexico. You know, forget China for a second. When you think about Canada, Most people don't know this, and Canada is actually where we get a lot of energy from. And so Canada also announced reciprocal tariffs and said, you know, we're going to tax you on the energy that you pull from us. And so you saw energy stocks start to take a dip. If you didn't know that, that is why you seen a dip in energy stocks. In fact, let me pull up the XLU, like utilities. A lot of utilities kind of just turned over and whoop, started to sell off. If you look at the XLE, which is the energy S&P 500 sector, you can see, if you even look at it, go back down to the date. This was Tuesday. This was Monday, where he said the tariffs are going to go into place. And then they announced, if he does that, we're going to do a reciprocal tariff on energy. And so you saw energy stocks just go, right? Just take a dump. So you got energy that took a dump. Then the other thing that I believe we get this from both Canada and Mexico, but you got to think about steel. You got to think about aluminum, right? I believe we get some of our wood through Canada or Mexico, right? So when you start thinking about those things, you start to say, well, wait a minute, at least for us here in Michigan, it's like, wait a minute, that's going to hit the auto industry. So anybody trying to buy a car, cars are going to get more expensive. Houses are already expensive to get into. Nobody's moving. So because nobody's moving, you're kind of left with two things. Nobody's moving because they got a high interest rate. They got a low interest rate and they don't want to move and get a higher interest rate. That's number one. Number two, if nobody's moving, then kind of you're left with like, I guess I have to build a house or buy something new that they're building. But if the materials that they're using to build a house is costing more, you A, have to buy a more expensive house, and B, you have to buy a more expensive house at a higher interest rate. None of these situations are good technically. Technically, they're not good short term, which is why you saw when we take a look at the S&P 500, basically we just been on a tear to the downside. I mean, just swoosh, swoosh, swoosh. We're on a tear to the downside. But here's the thing. The market is forward looking. So these tariffs technically haven't gone in place. Well, some went in place Tuesday, then the president pulled them back. And so it's not like overnight everybody paid more, but because people are anticipating things costing more or people doing less business, the market sold off. But where did it sell off to? It sold off right down here to support. We were talking to our members about this inside Power Trade University, that at some point we're going to start to look at a position where we are oversold in the market. And we might be getting down to that level now, to a level of support where it's like, okay, don't panic. They've already anticipated the tariffs being horrible. So now if the tariffs don't fully go in or they aren't as bad as we thought, then the market could possibly start to bounce or rebound. But I want to give you a different perspective. Before I do, let me know, what are your thoughts on the tariffs and how, this whole thing is playing out? Because I'm going to give you a perspective that I don't think many people have thought about. But let me hear from you in the comments. I love to keep this live and interactive. Like, what are your thoughts about your portfolio, the market, with respect to everything that's going on with the tariffs? I'd love for you to just type it in the box, because I'm going to share with you a perspective that I don't think a lot of people have thought about. If you look at the news is saying that tariffs is a tax on the American people. Well, some news stations are saying that. They're saying that it's going to actually cause inflation because things are going to be more expensive. But I don't know if I necessarily agree with that. So here's what I'm going to do. I want to draw out the real game plan, and then I'm going to share with you. Based on one of these news headlines why I think this is going to be the case. All right. And if you don't have any thoughts, you should have some thoughts about what's going on with the tariffs. So here's what I think is happening. Here's what I think is really playing out. I'm going to draw President Trump, and I'm going to draw the Republicans over here in red. All right. So we got the Republicans over here in red, right? Boom. I'm going to draw not necessarily the Democrats, but in blue, I'm going to put Jay Powell, okay? And I'm going to put the Federal Reserve. And I just want to give you a perspective that here's what I think is going on. I think the president, let's go / Trump, President Trump. Here's what I think is happening. The real play is President Trump wants Federal Powell to lower interest rates. However, Jay Powell is like, I'm not lowering interest rates right now. And so because the Federal Reserve acts independent of, the House, independent of Congress, independent of the president, they can't make Jay Powell do anything, and they cannot fire Jay Powell. So here's my thoughts. Because they can't fire Jay Powell, they can't force him to do what he ultimately wants to do, which is lower interest rates, which would spark borrowing, which would spark housing applications and people willing to buy houses, because it's not really the price of the house that people care about. People care about what their monthly payment is going to be. They'll buy a house at a higher price if the interest rate is low enough to where their payments are reasonable. They don't want to buy a higher price house and pay a higher interest rate to where their payments monthly, they can't afford it, and then they're going to end up foreclosing on the home anyway. So lower interest rates is really the key, in my opinion, to the whole economy, because people borrow to buy a car, people borrow to buy a house, people borrow to finance. If you're a business, a corporation, you're going to expand, build a factory or something like that. You don't typically just roll up and pay cash for this stuff. This is stuff that you finance over time, and you're willing to do that if you have a favorable interest rate, which is good for the economy. Does that make sense? Give me a thumbs up or something if this makes sense to you guys. Or type "makes sense" in the box. All right, so that is what I believe is the real play. So let's go back to President Trump. He cannot force them to lower interest rates, but what can he do? What can he do? What can he do? He can do a couple different things. Let's just stick with tariffs first. So number one, with tariffs, what is the repercussion of tariffs on the economy? Right? It slows down spending, right? So it slows down spending. Why? Because if you got to pay 25% more for a car, you go think twice before you buy a car. If you are a auto manufacturer and you can't pass that cost on to your suppliers or down to your consumers, you're going to sell less cars. If you sell less cars, it's going to hit your earnings report. If it hits your earnings reports, you have to figure out a way to make your numbers. And how else are you going to make your numbers? Number one, you're going to cut costs. Well, how do you cut costs? You can cut people, you can cut advertising, or you can quit spending as much, lower inventory, not as many cars, colors, different things like that available, right? So companies, what I'm trying to tell you is that companies don't just sit there with their hands tied and say, tariffs are coming, I guess there's nothing we can do. They can lay people off. They cannot order as much material, all the things that I just talked about, right? They can try to pass on some of that cost to their suppliers. They can stop spending as much money on advertising. They got levers that they can pull. They don't just sit there and take it. But all of those levers points to slowing down the economy. If they're not buying as many products, as many services, building as many cars, as many houses, whatever the case may be, ordering as many products from China, is less to sell to you, right? Which all starts to slow down the economy. And then they can also lay off people. If they start laying off people, which brings me to my next thing, which is DOGE, the Department of Government Efficiency, right? We have to get our government spending under control. So what are they doing with DOGE? They are laying people off, and they are also cutting federal spending, right? So they're cutting federal spending. They say, look, we're freezing contracts, we're freezing programs that we've been spending money on, and we got to reevaluate things because we got to get the $6.7 trillion debt under control. Now, I'm not here to talk about if that's a good thing, bad thing, if your program got cut or something like that. If you're a government employee, my heart goes out to you if you lose your job. We don't want to see people lose jobs. But what I'm saying is it's a dirty job and somebody got to do it. And these are the repercussions of what they're doing and what they can control. So back to the chart. Think about it. You got to put your thinking cap on. If tariffs slows down the economy If Department of Government efficiency can pause federal spending, pause federal contracts, and start laying people off, if you feel like you go get laid off, what do? You stop spending money. You start holding on. You don't know if you got to go have a job next week, next month. So you don't go buy a new car. You don't go buy a new house. You don't go buy a gold chain. You don't go book that vacation or that trip. It slows down the economy. All right. So here's the thing. If the economy slows down too much, what bullet do we have in the chamber to shoot? We have this bullet right here, which is what the president wants all along. We give the Federal Reserve and Jay Powell the ammunition that they need to now lower interest rates. If you take a look at this headline, think about what this headline Federal Powell just came out and said today. Powell says the Fed can wait for greater economic clarity on economic outlook before they lower interest rates again. That's exactly what he came out and said today, right? Look at what he said. The Federal Reserve Chairman, Jerome Powell, shown here prior to testimony to the House Financial Services Committee last month, said, it's too soon to know if uncertainty among business and consumers will slow the economy. Powell today sent a clear signal that the central bank intends to hold interest rates steady and wants to see greater certainty about where the economy is headed before making a move. I want you to think about what he just said before making a move. So what he's basically saying is, look, we need to understand the effects of President Trump's policy before we make any more moves. So we just go hold steady on the interest rates. But if you read between the lines, what he's actually saying is, if the president's policy, if the president's going to use tariffs as a negotiation tool, he's not just negotiating with Canada, Mexico, and China. He's also technically negotiating with Jay Powell and the Federal Reserve, because he's saying, okay, I need to scare and talk China and Mexico into sending more troops to the border, into stopping the flood of fentanyl. I need Mexico's help with the illegal aliens coming in. China, he's saying, y'all been ripping us off with trade practices for years. We pay a higher tariff to import y'all stuff, but when y'all import ours, we pay more, and it's off balance, right? This is what they're saying. If that is true, he's like, I can kill two birds with one stone, is what I'm thinking. I'm thinking he's like, we can kill one bird, bring negotiations to the table with tariffs, right? Because think about it. Nobody wants to see their economy hurt. China doesn't. Canada doesn't. Mexico doesn't as well. So nobody really wants to see their economy slow down. So now it's like, if you don't like it, then let's negotiate. But on the flip side, he's like, okay, if I can slow down spending and make the economy cool down a little bit, it gives Jerome Powell the data he needs to see to say, okay, it's time to lower interest rates because we don't want to go into a recession. Then if Doge can come in and get the federal government budget and spending under control, number one, they kill one bird with that stone, which is they get spending under control, which we've been kicking that can down the road for years, saying our grandkids are going to be paying for our debt. So at some point, we got to tackle it and get it under control. If we're also laying off people, that also slows down the economy. So you got two things that can scare people into not spending money, slowing down the economy, which then gives Federal Powell, or Jay Powell, the Federal Reserve, the ammunition they need to do what we all technically want to see, which is the interest rates get lower and inflation come down. I think that is the real bomb that we're trying to have. I think that's the real culmination of all this that we're trying to have happen. If we can get the other countries to come to the table, help us at the border, help us out with the trade deficit, as well as lower our spending and budget deficit. If they can pull this off, this will be the biggest reconstruction of the U.S. economy of all time. I think it will be. I think it'll go down in history if they can pull it off. Now, obviously, some people will get upset and pissed off, rightfully so. if their budgets and their program and stuff get cuts. But I believe we will come out stronger when and if this all comes to an end. Now, let me show you a chart of the S&P 500, and I want you to put your thinking cap on for a second. If you look at the S&P 500, I'm going to switch this to a monthly chart. I want to show you the S&P 500, like kind of an all-time chart. So let's go to a 1 month chart of the S&P 500 and let's zoom all the way out, right? Here's what I find interesting about all of this. And I think you should take comfort in this if you're watching this live or on a replay. Here's what I think we should take comfort in. The fact that if you go back to 1988, about right here is where the U.S. economy started to take off. You can see this. The U.S. economy from the S&P 500 standpoint started to take off. And then in 2012, we really took off. All right. And so the U.S. economy all the way up until, right here, we kind of had the COVID pullback that scared a lot of people. And then boom, we are way up here right now. Here's what I want you to think about. If we have been able to rack up all this debt, trillions of dollars of debt, if we've been able to survive COVID, we've been able to support Ukraine throughout the Russian-Ukraine war, we've been able to do basically this well from a stock market standpoint. Now I'm talking stock market, right? Economically and from the stock market standpoint. If we have been able to hit these levels with so-called unfair trade practices, if we've been able to hit these levels with no support from Mexico on the borders, we've been able to hit these levels with us not having a balanced trade deficit with China and other countries. What I am trying to get you to see is, where can the stock market go if all of those other factors become in our favor? That I'm going to say this again. Where can the stock market go if the trade practices are in our favor, if we got help at the border and we got help big picture, or we reorganize our government spending and get our debt under control and become more efficient as an economy? Where can the stock market go from there? And so that right there is what I am focused on. And I personally believe that there's going to be some of us that get really rich by the time this is over, if we can survive all the noise, if we can survive the short-term pain. If we've gotten this far by not tackling our debt, by not being efficient, by not having help at the border, by not having a balanced trade deficit with China, Canada, Mexico, all this stuff, and we still have hit all-time highs in the stock market, what happens if Mexico comes to the table even just a little bit and say, here's what we can do? What happens if Canada comes to the table even just a little bit and say, you know what, here's what we can do? What happens if China comes to the table even just a little bit and says, you know what, all right, here's what we can do? What happens if we actually do get more efficient with the government spending and get our $6.7 trillion deficit under control? When you take a look at this chart of the S&P 500, where could this thing be? Where could this thing go? I'm telling you, that excites me. Now, when you turn on some of these news channels, they're preaching doom and gloom, recession, this, that, and the third. I am telling you, based on the data, look at where we've gone, and we haven't even tackled deficit. China, Mexico, USMCA, US, Mexico, Canada Trade Association. We want to renegotiate that. Where can this thing go? So when we switch this back, let's take a look at the daily. Am I making sense? Y'all, here, man, y'all got to feel me on this. This is super exciting to me. Where's my horn? All right, because I think it's going to be a party. I think it's going to be a stock market party if we can get through this. So if we look at this on a daily chart, the pain that the stock market is talking about, what pain? I mean, if you look, this is where we've come from. I want to make this smaller, zoom out. Look at where we've come from, guys. All right. We just stopped at 2018. This is where we've gone. We went from, about 2,800 to, 5,600, 6,000. We have doubled. The stock market has doubled in about 7 years. When you look at the price standpoint, 2,800 to even right now, 5,600, stock market has doubled. And we've been through a COVID-19 pandemic, inflation, lockdown, all kind of stuff. 4 different presidents, right? All kind of stuff. So when you look at it from that standpoint, we're not in that bad of a shape from the recent pullback. I know the news wants to make us feel like the world is over, but the reality is this is nothing more than a pullback, at least at this moment, to support. At least at this moment, we are sitting at a very well defined support level. And I don't really think that is cause for panic when you zoom out and then you look at where we've come from and where we're sitting at in the overall market, right? So from a headline standpoint, somebody's got to tackle tariffs. Somebody's got to tackle a trade war. Here's the other one that we didn't even talk about. Let's go back to this sheet right here. As far as from a good news standpoint, what happens? Let's go back over here to the options that the president and his team has. What happens if we get a Ukraine? I'm just gonna put a ceasefire. What happens if we get a ceasefire between Russia and Ukraine and we get a mineral deal? So what happens if we get access or some type of deal that says, you know what, the U.S. has exclusive rights to the minerals that are in Ukraine, and we negotiate the end of a war between two countries? So when you look at the downside, you say, okay, well, how long can tariffs last? They can't last forever. Now, they can slow the economy down, but again, I told you, it slows the economy down. It gives reason for Jay Powell to lower interest rates, so I think it'll spark borrowing and buying. Layoffs, federal spending, we got to get that under control anyway. If you laying people off, slows down the economy, slows down because people depend on government contracts. Got it. But then we can lower interest rates, which is the key here. And if we can create a ceasefire between Russia and Ukraine, and then we get a mineral deal, what does that mean for the U.S. economy? What does that mean for our GDP? What does that mean for us not having to import those minerals from other countries and use it because we already got a good deal with Ukraine? So I believe that if you look through the smoke, that there is actually more potential for good news than there is for bad news, which is why I think long term, the stock market goes higher. And I believe the tariffs and the tit for tat tariffs and the slowdown in the economy, I think that's relatively priced in this current pullback down here to support on the S&P 500. So those are my thoughts on some of the big headlines swirling around the news. Now, let's talk about the Mag 7 stocks, because these are your top 7 that everybody's watching: your Apple, your Nvidia, your Google, your Tesla, your Amazon, your Meta, your Microsoft. Let's start with Nvidia. All right. Let's start with Nvidia. Even with Nvidia's most recent, even with Nvidia's most recent sell-off and pullback, it's really still just down here to a decent support level. If you look at it, from this standpoint, it's not like it's done something it hasn't done before. And that's the question you got to ask yourself. That's one of the things that some of the members inside the university asked me. So, Jason Brown, when would you go bearish? Well, when the market does something or stocks do something it hasn't done before. I can look at this and say, NVIDIA's come down here before and turned around. It's come down here before, turned around. It's come down here before, turned around. We're back down here at a pivotal moment where we have to wait and see what's going to happen. But here's what I can tell you. NVIDIA had blowout earnings, right? They had blowout earnings, right? They surprised on revenue. They surprised on EPS. The problem is most people didn't like the fact that the growth is slowing. But here's what you got to do. You got to ask yourself, why is the growth slowing? Why is the growth slowing? Well, you got to understand one thing, right? The previous administration put a chip ban. There's a chip ban on NVIDIA from selling their chips to some of the foreign countries like China. So the question you got to ask yourself is, if NVIDIA didn't have a chip ban, what would the earnings have been? And what would happen if the Trump administration removes the chip ban, right? So, I mean, that's something that you got to think about. Let me see if I can find the NVIDIA chip ban, some details on that. But you got to think about that. So they, didn't hit their numbers because of the chip ban. But if you look at right here, I'll pull this up for you, some of this data on this, the NVIDIA chip ban. So in October 2022, the U.S. Department of Commerce implemented export controls on advanced AI chips, all right? And then you can see right here, in January 2025, the Biden administration issued new regulations that restricted chip exports to 50,000 countries, all right? So before President Trump took office, they had a restriction that they couldn't export chips to 50,000 countries, with some countries requiring a license for orders over 1,700. And then China and Russia face complete bans of advanced GPU chip imports. So I want you to think about that. They're in the business of selling chips, but then they are on a list of exports where they can't export them to 15,000 countries. And if you need more than 1,700 chips, you got to get a license to require an order. Now, I don't know if that's good or bad, but what I am saying is, what would happen if that ban got uplifted? Where do you think this NVIDIA stock would go? So you got to think, it's not as bad as you think it is. It's just not as good because of some of these restrictions, because of some of the policies, because of some of the things that are going on. So I like NVIDIA down here. I think the stock can go higher. They got the best chips on the market. If you look at it, who are you going to get chips from? AMD? Look at this stock. It's in the toilet. They don't make the best chips in the world, right? Who else are you going to get chips from? Intel? Garbage. Intel's been garbage, right? You're going to get the chips from Intel? Probably not. Now, you probably can get some chips from Broadcom, which they're doing their thing. Okay, fair enough. But NVIDIA makes the chips that everybody wants. And there's 500 countries that they can't even export them to. So you got to keep that in mind. So I think there's an explosion to come on certain stocks. Let's talk about our good friends, Apple. Apple is actually just holding its own right here. It's in a very nice channel. But Apple, surprisingly, is actually not doing that bad. It's just actually going sideways here. And then you got this pullback probably to the 200-day moving average here. And we're just kind of sitting in this flag holding pattern. So not a lot to say about them. Obviously, Apple is going to get caught up as far as like, people worry, is Apple going to get caught in retaliatory tariffs, right? Because Apple does do a lot of business in China. And so if China's like, well, we're going to tax you on any iPhones and things brought in from the US, Apple could get caught up in the crosshairs, which I think is keeping the stock compressed, which is keeping it from breaking out. When I say compressed, it's just kind of keeping it in this range, right? It's like, oh, we're excited, oh, we're excited, right? So it's not really doing much, but I think once we get clearer goals from the administration, clearer rules of engagement between them and China, I think we're going to see this thing explode and go higher. So I think we got to be patient. If you look at Google, Google had a nice pullback. Here's the question you got to ask yourself. I talk to the university members. I say this, listen, do you want to be the person that owns Google up here at 200 bucks at the all-time highs? Or do you want to be the person who owns Google down here near, 160s, 173 off about a 15% pullback? If you look at the measured move from here to about here to where we're at right now, that is a 16% pullback on the stock. Who doesn't want to own a Google at a 16% discount with the stock down here near support? Here's the question you got to ask yourself. Does that mean the stock can't fall lower? Listen, nobody knows where the absolute bottom is. But here's the one thing we do know. We do know where the top is right now. And we can safely say we're not buying on these stocks at the top. And that is what's important to know, that you're not buying at the top. We, at least for now, know where the top is at because it ran up to the top and sold off. We don't know where the bottom is, but what we do know is that we're not buying at the absolute top. And that is what you can take comfort in if you can build a portfolio of stocks and or options that go out far enough for this whole thing to turn around. Let's take a look at Tesla, right? A lot of people upset with Elon Musk. I get it, right? No one wants to love the guy who's coming in, cutting, slashing job and being efficient. But the reality is electric cars are the future, right? That's where we're going, is where we're headed. And this is the #1 American car maker of electric cars. When you look at the fact that you're not buying it at $485, the stock sold off over $220. Let's do a measured move again. From up here to where it's at right now, that is a 46% discount on the stock. 46%. Now you think about the fact that he has the president's ear. You think about the fact that if they get tougher with China, that means Chinese electric cars are going to cost more expensive to import in America, which gives Tesla an upper hand. It also messes Tesla up for selling cars in China. But so what? In the American market, they at least have an upper hand if they're not going to pay a 25% tariff on things imported because they build in the US or Mexico or whatever the case may be, their American company. So I don't know at what point this is going to stop falling and turn around. But what I can tell you is last time the stock was down here about 216, it ran all the way up to $480. And electric cars are the future. They're only going to get better. They're only going to get cheaper. The technology is only going to get better. And so I look at this more as a long-term investment. If I can buy shares, definitely not at 480, but now 40% off down at 262. Once again, I don't know where the bottom is, but here's what I do know. I know where the top is. And the top is 486, and we are not buying it at 486. So I think the upside is imminent. It's just you got to sit through some downside volatility until we can get stable. If you look at our good friends, Amazon, this is another one. When you look at the measured move, we're just going through the Mag 7 if you're just joining us. If you look at, nope, not that. Let's do the measured move on Amazon. If you go from the top to where it's at right now, 18% discount on your Amazon stock. Stock sitting right here at support with a doji today. I like it. Here's the thing. The cloud spending is obviously going to slow down. Nobody's making big chip investments, big cloud investments when they don't know what's going to pan out with the government or with the president's economic policies. But once that's clear, one thing that's irrefutable is that we need AI, we need more chips, we need more infrastructure, we need more cloud. And AI is not slowing down. It's only speeding up. They're starting to implement AI into everything. You write an email, there's AI into it, right? It's only going to get better. I saw something where McDonald's was looking to use AI to improve drive-through times and their busy times and customer behavior and try to have certain food ready. So, I mean, AI is going to get into everything, which is basically computers processing large amounts of data. And you're going to want companies that you trust to store that data or use their cloud. Those companies are going to be Amazon. Those companies are going to be our good friends, MSFT, Microsoft. All right. Those are all companies that I think stand to benefit from once we get a little bit more clarity on tariffs and economic policy and where things are headed, and companies can get back to spending money, get back to investing in the US and in the data centers. These are the companies that stand to benefit the most from it. And so I like where they're sitting at right now. Once again, the question is, when are they going to start turning around and going higher, Jason Brown? Your guess is as good as mine. If I had the crystal ball, I'd rub it and I'd send a text alert to all our members and say, this is the day you buy because it's the bottom is in and the market's going back up. I don't have that crystal ball, but what I can tell you is that the market is forward thinking and some of this bad news is already baked in. I say some because not all of the bad news is baked in, but some of it is baked in. And when we get too pessimistic, we forget that there could actually be some good news. And we're gonna end on that in a second. Let me look at the last one, which is Meta, which is Facebook. If you look at Meta, this thing, you put the moving averages on it, it broke the 50, but if you take the moving averages off, I really like the uptrend on this. If you look at it from this standpoint, the stock is still in a bona fide uptrend to where, boom, we hit support, we bounce. Boom, we hit support, we bounce. We hit support, we bounce. We're technically right back down here at support. It's just all about understanding the right option play if you're trading options to take advantage of this, and then how to protect yourself if it breaks down and goes further. But the reality is, a lot of these stocks, and we can kind of wrap up with this. If you got any questions, feel free to type it in the box as we get ready to wrap up. I think the reality of it is when we go back to this sheet, it's like a lot of this bad news is baked in. Tariffs, okay, it's baked in. We had a sell-off, Doge, layoffs, federal spending. It's happening right now, is baked in. What I don't think enough people are thinking about on the positive side is that as this stuff slows the economy, is that boom, we could give Fed Powell the energy, the reasons he needs to lower interest rates, which is what we ultimately want. Also, all this slowdown could also, let me draw this one on here that I didn't put in here. All of this slowdown could also cause lower inflation or inflation to drop, because when we stop spending, companies can't just keep raising prices. If we stop spending, they have to all of a sudden start putting stuff on sale. So this also can cause lower inflation. And then again, if we get a ceasefire in the mineral deal, what could that mean for our GDP and our economy? If we get some deal with Ukraine to get exclusive rights to their minerals. So here's what I'll say as we wrap this up. I don't think enough people are giving credence to the fact that I don't think they're giving enough energy to the positive things that could potentially go right once some of this stuff is ironed out. And I think those are the people who are going to get caught off guard. I think if you're too far left, and I don't mean left or right wing politics. I mean, if you're too far left thinking the world is over, we're going into a recession, and I'm going to lose all my money. If you're too far left thinking all of that, I think you're going to get caught off guard and not see through the smoke that, wait a minute, all of this could actually have a silver lining. And if we get the lower interest rate, if we get inflation now, and we get a mineral deal and a ceasefire, everybody likes to see a war end. And if we come out of it with access to resources that we didn't have before, that's only good news for the U.S. economy, baby. So I'm long-term bullish on the U.S. economy. I'm short-term in the camp of we're going to have to take on some short-term pain for some long-term gain. So I hope you enjoyed this live stream. If you know somebody who needs to see this, make sure you send them the replay. Leave me a comment if you enjoyed this. Leave me a comment below. Let me know your thoughts about the stocks we covered, my thoughts on the economy. Let's just keep the conversation going. I love hanging out with you guys here on YouTube, talking stocks, talking economy, talking what could possibly be. So happy trading. Hit the subscribe button if you're not. Hit the bell notification. And let's keep the conversation going in the comments. I'll see you on the next one. Peace.